Federal Reserve is an independent agency, and that means basically that there is no other agency of government which can overrule actions that we take.
The Federal Reserve, the Fed, a source of numerous memes, a topic that has reached the critical mass of mainstream consciousness. A question that always lingers in the air is, who controls the Fed? Before we can answer that deep question, we need some context. What does the Fed do, officially and unofficially?
The Federal Reserve's obligation and what it does in monetary policy is try to influence interest rates, and in that way to maximize employment and to stabilize prices.
Officially, the Fed has four main responsibilities. Number one, conducting the nation's monetary policy by influencing money and credit conditions in the economy in pursuit of full employment and stable prices. Number two, supervising and regulating banks and other important financial institutions to ensure the safety and soundness of the nation's banking and financial system and to protect the credit rights of consumers. Number three, maintaining the stability of the financial system and containing systemic risk that may arise in financial markets. Number four, providing certain financial services to the US government, US financial institutions and foreign official institutions, and playing a major role in operating and overseeing the nation's payment systems.
So who got the money?
To financial institutions in Europe and other countries.
Which ones?
I don't know.
$500 billion and you don't know who got the money?
The loans go to the central banks, and they then put them out to their institutions to try to bring down short-term interest rates in dollar markets around the world.
Well, let's start with which central banks got the money.
There are 14 of them, which are listed I'm sure they're listed in here somewhere.
It is well enough that people of the nation do not understand our banking and monetary system, for if they did, I believe there would be a revolution before tomorrow morning. Those are the words of Henry Ford, founder of the Ford Motor Company.
Unofficially, the Fed enriches the top 0.1%
in a process known as the Cantillon effect, which basically states that money printing itself increases inequality via asset price inflation. Moreover, we currently have a situation whereby corporations run by executives with huge stock packages borrow money from Fed banks for roughly free, buy back stock, thus boosting its price, then sell their own shares using the proceeds to
diversify
into other assets, namely other stocks, expecting the Fed to keep the asset inflation carousel going indefinitely. The recent spate of bailouts has highlighted the severity of the situation. The Fed's policy of subsidizing interest rates has incentivized corporations to
borrow cheap money
and buy back shares instead of saving cash for a rainy day. The executives pocketing multi-million-dollar bonuses via this financial engineering should be chastised. But ultimately, it is the Fed that facilitates this, just like it was the Fed who incentivized greedy bankers leading up to the 2008 mortgage crisis. To understand who controls the Fed, we must go back to the Fed's formative years. The year is 1910, the month is December. Senator Nelson Aldrich was a prominent American politician and a leader of the Republican Party in the United States Senate, where he served from 1881 to 1911. His daughter Abby actually married John D. Rockefeller Jr., son of the famous John D. Rockefeller. Aldrich and 6 other men were about to embark on a journey to Jekyll Island, an island off the coast of Georgia, where there was an exclusive resort which counted the Morgans, the Rockefellers and the Vanderbilts as members. These 6 men were Paul Warburg, a partner at the investment bank Kuhn Loeb Co., Frank Vanderlip, president of National City Bank, now known as Citibank, and a former Treasury official, Benjamin Strong, vice president of the Bankers Trust Company and the future founding chief executive officer of the Federal Reserve Bank of New York, Henry Davison, a partner at JP Morgan, Charles Norton, president of JP Morgan's First National Bank of New York, and A.P. Andrew, who coincidentally was an economics professor at Harvard, where he taught FDR, who would later sign Executive Order 6102, otherwise known as the Great Gold Robbery of 1933. Aldrich chose the attendees for their expertise, but he knew that their ties to Wall Street could arouse suspicion about their motives and threaten the bill's political passage, so he went to great lengths to keep the meeting secret, adopting the ruse of a duck hunting trip and instructing the men to come one at a time to a train terminal in New Jersey where they could board his private train car. Once aboard, the men used first names only to prevent the staff from learning their identities. For decades after, the club referred to themselves as the First Name Club. A member of the exclusive Jekyll Island Club, most likely JP Morgan himself, arranged for the group to use the club's facilities. Munsey's magazine described this exclusive club as the richest, the most exclusive, the most inaccessible club in the world. According to Frank Vanderlip, I was secretive, indeed as furtive as any conspirator. I do not feel it is an exaggeration to speak of our secret expedition to Jekyll Island as the occasion of the actual conception of what eventually became the Federal Reserve System. Discovery we knew simply must not happen, or else all our time and effort would be wasted. If it were to be exposed that our particular group had got together and written a banking bill,
That bill would have no chance whatever of passing by Congress.
3 years after their historic meeting at Jekyll Island, the Federal Reserve Act was signed into law on December 23rd, 1913, and with that a small group of bankers had a monopoly over the creation of American money. The Federal Reserve Act was originally granted a 20-year charter to the Federal Reserve banks. However, on February 25th, 1927, it was extended indefinitely. This proved crucial as the sentiment in 1933, nearing the end of the original 20-year charter, was not exactly positive with regards to the Fed. Since then, the Fed have been held to account by rigorous audits and comprehensive investigative procedures.
So I'm asking you if your agency has, in fact, according to Bloomberg, extended $9 trillion in credit, which, by the way, works out to $30,000 for every single man, woman, and child in this country. I'd like to know, if you're not responsible for investigating that,
Who is?
No, we have responsibility for the Federal Reserve's programs and operations, audits, to conduct audits and investigations in that area. In terms of who's responsible for investigating, would you mind repeating the question one more time?
what have you done to investigate the off-balance sheet transactions conducted by the Federal Reserve, which, according to Bloomberg, now total $9 trillion in the last 8 months?
I'll have to look specifically at that Bloomberg article. I'm not, I don't know if I have actually seen that particular one.
On June 4th, 1963, US President John F. Kennedy issued Executive Order 11110, authorizing the Secretary of the Treasury to issue silver certificates. This was the first of a series of moves to take control of US money back from the Federal Reserve by giving greater power to the Treasury. Just 5 months later, on November 22nd, 1963, John F. Kennedy was assassinated. 1861 was the beginning of the Civil War. Abraham Lincoln was short of money to finance the North's war effort and went to the bankers of New York, who agreed to lend him money at interest rates varying from 24 to 36%. Lincoln refused, but he still needed to solve his money problem. Colonel Dick Taylor came to the rescue and put the solution to him. Just get Congress to pass a bill authorizing the printing of full legal tender Treasury notes and pay your soldiers with them, and go ahead and win your war with them also. This is what Lincoln did, and on February 25th, 1862, Congress passed the first Legal Tender Act, which authorized the issuance of $150 million worth of greenbacks. These Treasury notes were called greenbacks by the people because they were printed with green ink on the back. Lincoln called these greenbacks the greatest blessing the American people had ever had. A blessing for everyone except the bankers, since it was putting an end to their racket.
By the stealing of a nation's credit and the issuing of interest-bearing money.
So they did everything possible to destroy these greenbacks and sabotage Lincoln's work. Lincoln said, "I have two great enemies, the Southern Army in front of me and the bankers in the rear.
And of the two, the bankers are my greatest foe."
Lincoln was re-elected president in 1864, and he made it quite clear that he would attack the power of the bankers once the Civil War was over. The Civil War ended on April 9th, 1865, and Lincoln was assassinated 6 days later on April 15th, 1865. The central bank in each country is the legal entity that manages the nation's money supply and can lend money, with interest of course, to the government and other private banks in the country. This is how it all works. First of all, when the government needs more money, they ask the Treasury Department for money by issuing an IOU, or a government bond, which is a bond issued by the national government with a promise to pay periodic interest payments and to repay the face value on the maturity date. Number 2, the Treasury, an executive department of government, receives the bond from the government and forwards it to the nation's central bank. Number 3, the central bank, a privately owned bank and the entity that owns the monetary system of the nation, then writes a check to the local banks in the country for the value of the bond and authorizes them to create this new money. This central bank, of course, just invents money out of thin air. For more clarity, we can refer to Putting It Simply, released in 1984 by the Public Services Department of the Federal Reserve Bank of Boston. When you or I write a check, there must be sufficient funds in our accounts to cover the check. But when the Federal Reserve writes a check, there is no bank deposit on which that check is drawn.
When the Federal Reserve writes a check, it is creating money.
The local commercial banks then type numbers on a screen and create money out of nothing. At this exchange at the private banks, money is officially created and can be used to pay government bills. Another part of this money creation system happens on the commercial bank side. Every time you take out a loan, banks simply type in numbers digitally into your account and charge you interest on it. So basically, each time the bank makes a loan, the bank doesn't use other people's deposited money to loan to you, it creates new money by typing digits into a computer.
97% of all money
is generated that way. Only 3% is the physical paper cash and coins that we carry. Moreover, commercial banks can lend up to 10 times more money than they actually have in their reserves, a practice known as fractional reserve lending. To demonstrate how absurdly the system is currently leveraged, that reserve requirement has recently been cut to 0. Yes, 0. So who controls the Fed?
Well, an international cartel of central bankers, more ruthless and more intelligent than Escobar or El Chapo ever were. A cartel who have effectively perfected a form of modern slavery, with debt taking the place of chains and central bankers playing the role of masters.
I close with a quote from Howard Buffett, Warren Buffett's father. Even if it were desirable, America is not strong enough to police the world by military force. If that attempt is made, the blessings of liberty will be replaced by coercion and tyranny at home.
Simply flooded the system with money.
Yes, we did. That's another way to think about it. We did.
Where does it come from? Do you just print it?
We print it digitally. So we as a central bank, we have the ability to create money digitally, and we do that by buying treasury bills or bonds or other government guaranteed securities, and that actually increases the money supply. We also print actual currency, and we distribute that through the Federal Reserve Bank.
As essentially flooding the system with money?
Yes, exactly.
And there's no end to your ability to do that?
There is no end to our ability to do that.